We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. And here we are with the SPY, the SP 500 index, continuing to create that staircase effect from the 52-week lows that we hit last week and continuing to bounce even higher. The question mark everyone's asking is, will this fade at these levels, or is it breaking through resistance with strength, ready to take off to the next leg up? That's what we're going to break down in today's video. And today, within today's volatility, our SPY bot sent out a bear indicator since 9:50 a.m. and from that moment forward, as you see there in the chart, outflows crossed the midpoint to the downside with further weakness, and put options went up 200% plus within an hour, guys. You can now gain access to this as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts within the volatility, whether stocks are going up or going down. So here we are with the SPY, continuing that staircase effect that we've been talking about, and we have to break down what our inflow versus outflow and 42 vision indicators are showing. But before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So our Tesla bot turned out to be the home run of the day. Our Tesla bot sent out a bear indicator since 9:35 a.m. and from that moment forward, outflows crossed the midpoint, as you see there on the chart, to the downside with further weakness, and put options went up 200% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord, getting connected to our 42 vision indicator and our bots. And as you see popping up here on the screen, these are some of the other notifications from our bots, such as the QQQ and also our SPY bot within the day's volatility. And you can become part of this as well. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the SP 500 index, and as we've stated in previous videos, we hit a dip area here on the 30-minute, also on the 1 hour here, and also on the 1 day, right? Which is why we're red borders, and we're trying to reverse back up. And currently on the 1 day chart, we are at red with green borders. And those of you coming across the channel for the first time, why we're red borders is what we call the dip areas, and the full transitions back up is bright green, which is what we call the rip areas, and then they transition right back down. And this dip right here did not hit white with red borders, found support very quickly, and here we are at a point of extreme strength from this dip to this area, and eventually either it fades out and actually starts pulling back, or continues to have strength as it continues to hit newer highs and newer lows at a higher level, finding new supports. And we're going to break it all down in today's video, because the question mark is, could this continue, right? Everyone wants to know, is this going to fade away very quickly? I know a lot of people are speculating that this is a great time for this to actually pull back out of nowhere like it happened in the previous weeks. But is this time different? And that's what we're going to cover in today's video. So I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors using these resources to maximize in either direction by receiving this clarity and edge over the charts, whether stocks are going up or going down. And I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are under a bear indicator today in the middle of the day. It's our first bear indicator since the bull indicator that popped up here at 3:57. But here in the aftermarket hours, we are getting another bull indicator here based off the 30-minute. And if you pull up the 1 hour, no bear indicator has popped up just yet, but outflows have crossed. This is where it becomes a huge divergence, what's going on here in the aftermarket hours. And if this stays below the midpoint or pulls away from it, this could actually end up reflecting in the chart and eventually canceling out that bull indicator and getting a bear indicator in the process. So something to keep in mind here, what's going on as this continues to pull up and we're at extreme strength, which is bright green bars, and eventually they do get exhausted, and it's something to keep in mind, right? This was a full transition here from the dip to the rip, got that bear indicator, got those outflows, but interesting enough here, on the 15-minute and on the 30-minute, the inflows are coming in strong, guys. We came back up here, got a bull indicator, canceling the bear indicator from the middle of the day, and same thing happening here on the 30-minute, canceling that bear indicator, getting a bull indicator, and the inflows picking back up. So what's going to be significant here is a retest of today's highs and see if it breaks through that resistance or rejects it. And if it does, I'm going to share with you guys other key levels that I'm watching. But we also need this 1 hour to get back up over the midpoint with strength, guys. If it doesn't, and this bull indicator, yes, it's still in play, I get it. It could end up actually switching to a bear indicator if it retests any of the supports here as we see it. And in yesterday's video, I talked about how important 367, 368 was to be used as support. If that got broken through, the next level was 364, 365, and it bounced off of that today and ranged above it. And now we're pulling back up towards the 370s. And the key resistance right now is 372 to 373. And above that is 379. I would just round that up to 380. But if 380 gets broken through, we have some larger numbers to keep in mind based off the history of the chart, especially if these inflows can pick up on the 1 hour. This is going to be critical because, yes, we have a bull indicator on the 1 hour, but we have outflows dominating while the stock is actually going higher. Very interesting momentum here and a hidden divergence unless this is actually being delayed. And once we go into tomorrow's market trading and things start to pick up even higher, if it was to break this resistance of 375 or higher, maybe inflows can eventually start coming back up. But until then, outflows are still dominating on the 1 hour. The 30-minute, it just crossed over going into the end of the day, and it got a bull indicator here at 371. Lots of volatility here at these levels, and it's going to be crucial to either reject or keep going, and that's what we're going to break down here in today's video. So I'm going to go ahead and break down the key levels here going into tomorrow that I'll be watching, and then we're going to zoom out and look at some of the different analysis price targets that are actually very bearish, right? Like 15-20% from these levels. And I'm going to share with you guys where it is that they're getting these numbers from and how it is they're actually predicting, quote unquote, these levels to even happen. And we're going to break it all down in today's video. But here we are, right, with sideways action. We broke back above the 370s. We had a brief moment below it, right, at the 360s, 367 mark. Bounce back up, and 367 is a key support here to watch. Multiple rejections yesterday, and then today it bounced off of it. If we break through that, the next support is down here towards 360, and then below that is 357, which was a previous 52-week low. And then obviously the 52-week low of 348 will be crucial, right? Now, to the upside, we want to see this actually break above 375. That's the high of the day. If that's accomplished, we're getting back towards a key resistance of where things rejected really, really fast and fell from 375 to the new 52-week low of 348. If we can cross that, the next resistance is 380, which rejected multiple times in the history of the chart, even way back here in July. And if we can cross that, the next resistance is up towards 385, 388 area. Something to keep in mind if this bullishness continues. I'm going to be watching if these inflows could continue here. We're at 3.67 on the 30-minute, and the highs yesterday and today were near 7.6, 7.5. So we have room to go higher, and we even went higher back here on Thursday of last week on October 13th. To 15.07. So on inflows, based off the history of the chart, not guaranteed to move exactly the same, we have room to go higher to pull away from the midpoint, right? And same thing here on the 15-minute. I'll be watching if this could push up higher. We're currently at 3.3, and we hit highs here recently this week of 8.05, and last week on the 13th of October 16.1. So something to keep in mind as well. And the 1 hour, as it's actually sitting here negative at negative 0.62, we were recently at highs here when the market opened at 8.4. So I'll be watching for these inflows to try to cross back up and push up higher, and we want to stay above those supports of 367 and 365, 360 area, right? So let's go ahead and pull up the chart here and look at this on where these analysis price targets are being so bearish in the bigger picture. So here we are with the SPY, the S&P 500 index, with the lagging indicators pulled up in our 42 vision bull and bear indicators. And the lagging indicators is the purple line and the blue line. I love using these for technical analysis, but that's about it. Within the live action, they could be pretty delayed. And as you see here on the 1 week chart, you could see it just crossed over here back in September on our second bear indicator. And we've had a bear indicator since way up here on January 24th. And back here on the 2020 crash, it never crossed to the downside or back up. And it missed those areas of how quick, right, or efficient the bear and bull indicators popped up within the volatility. So very interesting stuff. 7 months later, 8 months later, it's finally crossed here, and our bear indicator popped up since January. This bull indicator turned out to be a fake out with our inflow versus outflow. We were able to see that, and now we have another bear indicator here within the volatility, and it just now crossed literally a month ago. But since it's a lagging indicator in the bigger picture, it has shown us in history when things have seemed to capitulate or hit a bottom. And even though throughout the history of the charts it hasn't always been the same, the corrections have been when we've bounced off those purple lines as you see there, and then the corrections that turned into a crash is when we either touched the blue line or crossed it, right? You could see that there in the history of the chart. Now, in the 2000 and 2007 bubble, you could see here our bear indicators are way ahead from when those crossovers happen. That's why, like I stated, this is more used for technical purposes, and it's a lagging indicator. Not really great in my opinion within the volatility, but it tends to show us where capitulation may happen. And the way that we see that is based off the history that once it crosses over, usually the last several months of the bear market are almost in, right? If you count these bars here, this is about 6 months here. If you count these bars here, it's about 6 to 8 months before things started to reverse. So that's what's interesting about it. If this was to cross over, now if this does cross over, we got a long way to go, right? And that's something to keep in mind as well. But if we capitulate like what happened here in 2020, that's going to happen pretty quickly, and we want to see this touch this area. And what happens here? Well, this is where the analysis price targets are coming from, near 3,000, right? The lowest ones I've seen is 2,800, 2,900, slightly below that level, and then 3,000 to 3,200. And this is the exact level that a lot of analysis price targets are coming from, which is based off this blue line. And the worst case scenario is if that purple line crosses over that blue line. Well, based off the history, as I showed you guys here in the video, it tends to be a few months right before the bottoming effect. And that's how we're going to be able to know if capitulation is on the way. So not guaranteed to always be exactly the same, but I wanted to show you guys where these analysis price targets are coming from and how it is that they're getting these numbers. And if we reject 4,000, which is based off the SPX, or 400 here on the SPY, that is going to be a critical level to be watching for possible further rejection and back down to retest the 52-week low. And then also keep in mind those price targets from 3,200 all the way down to 2,900. I look forward to seeing your thoughts down below. As always, guys, thank you guys so much for watching, and let's make some money.